Bitcoin paved the way for Wall Street to recognize that you don't have to have tangible assets to create value. But if you're going to tokenize what Wall Street does and you tokenize stocks and real estate, you need smart contracts. And the biggest and most secure blockchain with no downtime is Ethereum. And it's legally compliant, and the majority of stablecoins and real-world assets that have been tokenized are taking place on Ethereum. So to me, that is the macro moment. I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade.
The biggest macro trade of the next decade isn't stocks, bonds, gold, or even Bitcoin. It's Ethereum. That's the latest message from Tom Lee, co-founder and head of research at Fundstrat. Lee sees Ethereum as the backbone of Wall Street's coming tokenization wave, the platform where trillions in stocks, real estate, and real-world assets will be digitized. With the majority of stablecoins, tokenized assets, and smart contracts already running on Ethereum's network, Lee believes it's entering its 2017 moment, the point where mass institutional adoption goes from theory to reality. Today, Ethereum processes millions of transactions daily, secures massive value across DeFi, and remains the dominant platform for tokenization and real-world asset integration. In his view, the next decade could belong to Ethereum as much as the last one belonged to Bitcoin. Make sure to stick around until the end of the video, as Tom Lee explains how Ethereum is set to capture Wall Street's next trillion-dollar wave.
I just see so much risk because when they made the trade-off to proof of stake, they introduced a lot of complexities, centralization risks. There have been issues in terms of more vectors for attack when they do bridges and the layer 2s. How do you mitigate the risk in Ethereum that a lot of people see? I mean, the SEC could still classify it as a security.
Yes, well, these risks that you describe seem like smaller risks compared to the fragility of the existing financial system, right? So let's say, what is the financial system's value in the US, in the real world today? Well, the GDP is 80 trillion, and the financial system is 80 trillion, and that runs on plumbing that, if you're raising risks, are far more fragile. We are using trust vectors that are, in some cases, arcane systems, transfer agents that, rubber stamp things. I mean, look at the level of fraudulent activity on a traditional financial system ledger. JP Morgan, who I think is leading in terms of security for its customers and trying to do fraud prevention, still about 7% of their activity is suspicious. So you can't prevent infiltration. So is Ethereum superior to that? Yeah. I mean, so if you're comparing it to Bitcoin, we're comparing the wrong analog, is my opinion.
So if you had to put all your money into one, though, over the next 10 years, would you choose Bitcoin or Ethereum?
Now, why are we making that a choice?
I'm just curious. If you could just only choose one.
Well, if I had to choose, because I'm chairman of BitMine, which is an Ethereum treasury, then I, of course, would choose Ethereum. But I'm just going to say, in my 30 years of investment history, investing experience, I've never been told to have only one choice.
Okay.
And I've never seen anyone make a good decision based on one choice. You may have listeners that are kind of curious about Bitcoin, but, they have to also appreciate that every generation, like we're talking about Generation Alpha now, they are native. They're born native, and they're also going to be born in a world of AI. And so this idea of like physical money and only physical things represent value is not going to exist. So I think that's why Bitcoin's future, the best years are still ahead. For crypto, Bitcoin, obviously, and Ethereum. Not everyone will agree on Ethereum, but because we have another generation of people and decision makers that are really growing up as in a world of where AI is prevalent in their lives, and then really a token economy. So I think the best years are still ahead.
The shift to proof of stake brought Ethereum speed and efficiency, but also new vulnerabilities, centralization risks, added attack vectors from bridges, and regulatory uncertainty from the SEC. Yet when stacked against the outdated, fraud-prone plumbing of the traditional financial system, those risks look small. Even the most secure banks still face persistent infiltration. In that light, Ethereum can clearly be seen as a superior alternative to legacy infrastructure. But as Lee said, while some investors try to frame the choice as Bitcoin versus Ethereum, long-term strategy often rewards holding more than one high-conviction asset, rather than betting everything on a single pick.
I don't see this as a conflict. It's the same reason why someone who says they like Tesla, but they like Palantir. Because they're both scarce stocks, right? Like, there's one Tesla because there's only one Elon Musk in the world. And there's only one Palantir because while it's not completely clear exactly how Palantir transforms companies, you can see whether it's a hospital in Michigan or wherever, they are really providing superhuman powers to a business. So, you should own both. Bitcoin to me is a proven blockchain that, in my mind, is storing value. And it is, as like Michael Saylor says, it's immaculate. And I do think the simplest way to think of it is it's replacing gold. So at least let's get to 1 million, and then we can see how much further Bitcoin goes. But the world is also grappling with the digitalization of everything that we do. And so we're storing information, and we're tokenizing businesses, and we're tokenizing the dollar, and stablecoins have become so important, in fact, from a policy perspective, because stablecoins are now actually big buyers of treasuries collectively. I mean, that's why you may say you don't have to worry about deficits because stablecoins will buy the debt. Well, that is the ChatGPT moment for crypto, because what's happened is that the first killer app for crypto has emerged that is now seeing widespread adoption, which is stablecoins. And now Wall Street is running to tokenize and maybe even financialize their entire system on the blockchain. But that means they require smart contracts. So they're not fighting with Bitcoin. Bitcoin paved the way for Wall Street to recognize that you don't have to have tangible assets to create value. But if you're going to tokenize what Wall Street does, and you tokenize stocks and real estate, you need smart contracts. And the biggest and most secure blockchain with no downtime is Ethereum. And it's legally compliant. And the majority of stablecoins and real-world assets that have been tokenized are taking place on Ethereum. So to me, that is the macro moment. So in 2017, when I first wrote about Bitcoin, I saw this as the time when Wall Street would eventually come to recognize Bitcoin's importance. So Bitcoin, of course, had already accomplished a lot because it reached 100 billion in network value. And that's why I wrote about it. It's like, if you don't believe in something that gets to 100 billion, like, you got to pay attention to. And our thesis was that Wall Street would start to view this as just digital gold. Well, I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade.
So how are you feeling about these markets? Because it seems like, stock market at an all-time high, data points coming out that all seem very, very positive. But I just had an analyst on saying that we're in a silent recession. So what's your take on all this?
Well, we're constructive, and I think it is a good sign that many people are skeptical, because we believe this is one of the most hated V-shaped rallies, and we are making new highs. And instead of people justifying new highs, we have many people saying markets should not be here because the Fed is not cutting rates or there's tariff uncertainty. So that skepticism is healthy for markets.
Why is it healthy for markets?
Well, it's a sign that there's still price discovery underway, because if people were all bullish in the public realm, when everyone's bullish, then it's probably in the price. But when there's plenty of skepticisms and reasons to be skeptical, that allows markets to have positive surprise. And I think that's true of crypto. Bitcoin, is making all-time highs. It's kind of silent, right?
Well, when a lot of other people have been bearish and almost anticipating a crash, you've been sort of one of the people out there in the public eye saying, no, we're going higher. We're going higher in the S&P. We're going higher in Bitcoin. You're predicting, I think, even higher prices by the end of the year. So why do you feel that way?
Well, for equities, it's really straightforward. Number one, the economy has proven to be incredibly resilient. I mean, I don't think people should take a half-empty take. We've thrown massive tariffs. We had essentially a Cuban Missile Crisis moment, and yet S&P earnings are going to grow 12% this quarter. And there's not any signs really of sustained or a reigniting of inflation. There might be some inflation temporary, but that's very different than inflation dynamic taking root. And the second is people says that deficits and this current budget are so bad that no one's going to buy our debt, but yields are behaving. 10-year yield was 5%. 2 years ago, it's 4.5% now. And in terms of multiples, I think people are getting this wrong. There's a lot of people saying the market's expensive because the PE of the market should be the average of 16 or 17. Now, I've been an equity analyst for 34 years, and I used to cover stocks. I was a tech analyst for 17 of those years. I never once found an analyst who made money saying you should trade at an average PE. Like literally you either have arguments for PE expanding, and then you just have to determine when you've hit bubble, or PEs contract when the story is getting worse and there's no bottom. And we just threw 6 extinction events at the S&P 500 in the last 5 years. COVID, then a bullwhip supply chain effect that normally should bankrupt businesses. We had the fastest surge in inflation in 2 generations, the fastest Fed hikes in history. We had tariff Armageddon. I mean, literally a Cuban Missile Crisis moment for the stock market this year. And then the US bombed Iran's nuclear facilities. Each of those should have caused a crash in the stock market. And yet the S&P recovered every time. If we were talking about this as a single stock, we'd say, look, if you threw 6 things at a company and it survived, it should have PE expansion. And yet most people think the market's expensive.
The current rally in both stocks and crypto is one of the most hated in history, and that's exactly what makes it strong. Skepticism, as Lee said, is fuel for further upside because it means there's still room for positive surprises. The US economy has shrugged off tariffs, geopolitical shocks, inflation spikes, and record fast rate hikes. Events that should have crushed markets, but didn't. Instead, earnings are growing, yields are stable, and the S&P 500 has survived what Lee calls 6 extinction events in just 5 years. To him, that resilience justifies higher valuations and supports his call for equities to keep climbing into year-end. Lee extends that same resilience argument to crypto, noting that Bitcoin has pushed to all-time highs while much of the market was still bracing for a crash. He sees Ethereum as the other winner of the next decade, powering the tokenization of assets, stablecoin infrastructure, and real-world financial integration. Bitcoin is the ultimate store of value, while Ethereum is the execution layer for the digital economy. Together, they form the twin pillars of a new financial system. Lee believes both assets are positioned to lead one of the most transformative wealth-building cycles in history. Do you agree with him? Let me know in the comments. If you want to stay most up-to-date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video, and that it gave you some value. I'll see you all at the next one, and as always, all the best.